Very good morning, everyone. Everyone fine? Super? Very good. Today we are going to start lecture number 5 for CA Inter Advanced Accounting Regular Batch. In the last class, we started accounting standard 10, property, plant and equipment. Before that, we have done one financial management concept, that is time value of money. Means how to calculate present value from future value, how to calculate future value from present value. I hope that you have understood. Correct? So that present value concept will be used in this particular AS10. So you should be able to apply that. Okay? Yes, sir. Now in AS10, we have done the meaning of property, plant and equipment. Only we have done the meaning. What is the meaning of PP? PP are tangible item which are held for either production of goods or supply of goods or services, all for rental to other, all for admin purpose, and are expected to be used for more than one period. If both the conditions are satisfied, then the tangible item will be property, plant and equipment. Now there is some clarification for the definition. The admin purpose used in a definition is actually used as a wider sense. Means it will include all business purpose other than for sale in the ordinary course of business. It will include selling and distribution purpose, accounting and financing purpose, or whatever purpose. Okay? Yes, sir. Then second clarification is that investment property are covered under AS30. It is not covered under AS10. So any property which are held for rental income or held for capital appreciation are known as investment property, that is covered under AS30. However, any plant or equipment that is given on rent to other will be covered under AS10. Yes, sir. Then clarification number 3 was for treatment of spare parts, standby equipment and servicing equipment. In simple word, AS10 says that if it meets a definition of PP, it will be classified as PP and apply AS10. However, if it does not meet a definition of PP, then it will be classified as inventory and apply AS2. In that case, once you consume that item, then it will be recognized as an expense in profit and loss account. This much we have done. Correct? Now, the next point is recognition criteria. So what AS10 says that even though definition is satisfied, if the recognition criteria is not satisfied, it cannot be recognized as an asset in the financial statement. Means to recognize it as PP in financial statement, two conditions need to be satisfied. Correct? So what AS10 says, the cost of an item of PP shall be recognized as an asset if and only the following two conditions are satisfied. First, it is probable that future economic benefit associated with the item will flow to the entity. Means there must be future economic benefit and it must be probable. Probable means what? Probable means chances are more than 50%. Chances are more than 50%. Correct? So there must be probability of future economic benefit that it will flow to the entity. Second condition is what? The cost of the item can be measured reliably. If any one of these conditions is not satisfied, we can't recognize the cost of such item as an asset in our financial statement. Correct? You can see the first condition about the future economic benefit will come from a definition of asset only, but there must be probability. Means the chances should be more than 50%. Correct? So it is probable that future economic benefit associated with the item will flow to the entity and the cost can be measured reliably. Just try to understand for tangible item. Normally cost can be measured reliably. Therefore, can you say the second condition will be always deemed to be satisfied? Because once you acquire it or construct it, can you say practically, if I will say, cost can be easily measurable. So second condition will be always deemed to be satisfied. If suppose you are not able to determine the cost, then you can't recognize it. It means from my point of view, first condition need to be checked whether there is probable future economic benefit or not. If there is no probable future economic benefit, then the cost of such item cannot be recognized as a asset in our financial statement. Got this point? Are you able to understand? So give us some example. I'll just give you my example. What happened? When I was in my face-to-face classes, and when I decided to shift from face-to-face to recorded classes, correct now, means initially we were in face-to-face classes, then we were not doing any recording. Then the demand came for recording classes, so we started recording our classes, correct? So before starting it, can I say we were not knowing how to record the classes, correct? So what happened? I went to the vendor to purchase a camera. That time I was not knowing which camera will be required for recording my classes, correct now. So I have just given my description to the vendor that I want this type of recording. For that purpose I want one camera. So actually he displayed me many qualities of camera ranging from 20,000 to 2 lakh. Got this point? I said my pocket size is very small. I want only for shooting in my class. I don't want for my professional. I'm not a professional photographer. I just want to record my classes. So okay, said okay. Then he showed me one camera whose price was 35,000. He said that it will be okay for you. I acquired it. I purchased it. Invoice was made. I have paid the amount. Correct now. And of course, I have seen the demo also. The quality was good. But just try to understand, when I started recording my face-to-face classes, that time my face-to-face classes were also going on. So I started recording my face-to-face classes. Are you getting what I am saying? So suppose I am sitting here and all the students were there. So I put the camera, I installed the camera at the back, means at the end of the class, at the back of the class, correct? And I started recording. So that time what happened? When the output came, then video quality was also not good and audio was zero. Why? Because it was actually installed very far. And I realized that even though I purchased this camera, it will not give any future economic benefit because the quality of video and the audio was not good. Understood now? And because I purchased it and the box was opened and therefore I can't return it. Therefore, can I conclude now that even though I have acquired it, it is now certain that I can't use it for my business purpose, for recording purpose, and therefore future economic benefit will not flow to the entity from the use of that camera, and therefore it cannot be recognized as what? As an asset in our financial statement. Got this point? So both the conditions need to be satisfied. Quite possible. It is quite possible that you have purchased something and then you realize that it cannot be used for your business purpose. For example, I purchased one second-hand machine. Are you getting what I have? I purchased one second machine for my production purpose. Then later I realized that it cannot be repaired. Even though it is repaired, it cannot be used for our production purpose. It means even though you purchase it, there is no probable future economic benefit, and therefore it cannot be recognized as an asset. Got this point? So the first condition is very, very important for the recognition purpose. For tangible item, normally second condition will be deemed to be satisfied. Yes, sir. However, due to materiality concept, now you understood what is materiality concept. What happened? Suppose you purchase an item of which is very, I will say, of low value. Got this point? Suppose you purchase a calculator. So calculator will meet definition as well as recognition criteria. Because whatever calculator is a tangible item which will be used for providing services. And of course, there is a probable future economic benefit and cost can be measured reliably. But calculator is the price of the calculator is only 500 rupees. So can you say it is immaterial value? And therefore, can you say we can apply materiality concept and we can charge the entire expense even though it meet the definition and recognition criteria. Even though it meet the definition and recognition criteria, we can charge it to profit and loss account. What is given? An entity may means it is an option. There is an option. Decide to expense an item of PP if the amount of expenditure is not material. If the amount of expenditure is not material, then it can be charged to PL account as an expense even though it meets definition and recognition criteria. Okay, sir. Let me explain it, what they want to say. So suppose you purchase any tangible item. Sorry. So first you'll apply definition. Now after applying definition, either it will be inventory, or it can be the definition of PP, or it may be the definition of investment property. Correct. If inventory, then apply AS2. If investment property, then apply AS13. Got this point? But if it is PP, then of course we need to also apply recognition criteria. Because right now we are not discussing about AS2 and AS13. AS2 already covered, AS13 is coming soon in your life. Okay, sir. We are concerned about PP. So once the PP definition is satisfied, we'll apply what? Apply recognition criteria. So either it will be satisfied or not satisfied. If it is satisfied, then it will be recognized. Recognize it as PP and apply AS10. I need to apply what? AS10. Correct. But if it is not satisfied, then there can be two situations. Just try to answer whatever example I have given for camera which I purchased and it was not used for business purpose, for recording purpose. Then can I say, then it will be held for sale? Because if I will not use it, so I will just try to sell it. Correct. So write down. Not satisfied, but now classified as held for sale. Held for sale, but not in ordinary course of business. So even though camera is held for sale, but the sale of camera is not my ordinary course of business. It cannot be classified as inventory right now. Got this point? So held for sale but not in OCB. OCB means ordinary course of business. So in that case, accounting treatment is given under AS10 that we'll discuss at the end. Accounting treatment is as per AS10 only. Got this point? But this will not be recognized PP. Now it become PP classified as held for sale. It is not PP. When I say PP, PP will be shown in the balance sheet under the head property, plant, equipment only. But this will not be classified as property, plant, equipment. Now because it is held for sale. Got this point? So what AS10 say that it will measure at lower of a carrying amount. Carrying amount means is written down value. Correct? Madam, full carrying amount. Carrying amount means book value. Point number B, NRV. Understood? Chalega. But if there is no future economic benefit, means you realize that it cannot be used and it cannot be sold also. So there is no future economic benefit. Then entire expenditure will be recognized as an expense in PL. The entire expenditure will be recognized as an expense in PL immediately. If there is no future economic benefit, it will be charged to PL as an expense. Got this point? Have you understood? Now I think it is giving a better picture. What I want to say, the first definition need to be satisfied. Once definition satisfied, apply recognition criteria. Apply recognition criteria. Okay, sir. Chalega? Yes, sir. Now, once recognition criteria satisfied, then now we'll discuss about initial recognition and subsequent recognition. Correct? Let me give you one idea what we are going to do in AS10. Just draw whatever I am drawing. I am giving the entire life cycle of a PP. Suppose this is the date of acquisition or construction. Means can I say either PP will be acquired or constructed. Either it will be acquired or self-constructed. Okay. So it is the date of acquisition or construction. Correct. And at this point of time, it become ready for use. It become ready for use. Correct. Means you started construction, so it will take some time for getting ready. Even though you acquired, so on acquisition, it is quite possible it is not ready. It require installation, etc. It will take some time for getting ready. It can be 1 month, it can be 1 day, it can be 1 year also, but it will take some time for getting ready. Correct. So, are you able to understand what I am saying? So during this period, we call it this as initial recognition. Initial recognition. The initial recognition, the cost is known as initial cost. Initial cost. Now, if initial cost are directly attributable to bring the asset in the present location and condition for its intended use. Now, we'll discuss entirely in detail. Just write down whatever I'm writing. If it is directly attributable, it will be capitalized. It will be capitalized. But if it is not directly attributable, then it will be charged to PL as an expense. Then it will be an expense. I'm just giving an overview. Detailed discussion we are going to do. Just write down whatever I'm writing, even though you are not understanding. So can you say till the date of acquisition, from the date of acquisition till the date the asset is ready for its intended use, we call it initial recognition, and we capitalize all the directly attributable expenses, and we cease capitalization. We'll cease capitalization once the asset is ready for its intended use. Asset is ready for its intended use. Correct. Now, even though asset is ready for its intended use on this date, it is quite possible the entity has taken some time to actually put that asset into use. So this is the date when the asset is actually put to use. We call it put to use. The date when the asset is actually put to use. Correct. Now these expenses to a date when the asset is ready for its intended use till the date the asset is actually used commercially. Correct. Now this will be never capitalized, and this will be always charged to PL as an expense. Charged to PL as an expense. Understood? Correct. So once the asset is ready, then further capitalization is not possible, even though it is not yet used. So any expenditure incurred after the asset is ready for its intended use till the date asset is actually put to use will be charged to PL as an expense. Okay, sir. Have you understood? Quite possible now asset is ready, but we will use the asset after some puja, etc. Building is constructed, but normally we start using the building after some what? After some Mahorat, after some Havan, after some puja. Got this point? Yes, sir. The question arises, the useful life of this asset will start from the date of acquisition, the date when the asset is ready for its intended use, or the date when the asset is actually put to use. The useful life will start from which date? Correct. So I have given you three options A, B, and C. Of course, A is incorrect. It can be either B or C. What do you see? B is correct or C is correct? The useful life will start when the asset is ready for its intended use. When the asset is ready for its intended use. Let us take one example. Useful life is 5 years. Let's say it is 5 years. Okay, this is useful life. Useful life. Correct. Useful life will commence from the date when the asset is ready for its intended use. And let's say this is the end of useful life. Now, end of useful life, it does not mean it cannot be used further. It can be used. So there is a difference between economic life and useful life. Economic life is the total life of that asset in which it can generate some economic benefit. Means if I purchase this mobile, the economic life is 10 years. But I want to use this mobile for only 6 years. So for my business, the economic life is what, 6 years? Sorry, for my business, the useful life is what, 6 years? But the economic life of this asset is what, 10 years? Means it can be sold after useful life to any other person. And therefore, normally we say second-hand market we have the second-hand market normally. Correct now. So it is quite possible the economic life and the useful life of this asset is different. So economic life is always either equal to or more than what useful life. Useful life cannot be more than economic life. Useful life cannot be more than economic life. Correct? Understood. And for depreciation, we always use useful life, not economic life. Correct? Understood what I am saying? Correct. So this is the useful life. So during the useful life, we depreciate the asset. It means depreciation will commence from which date? The asset is ready for its intended use. The asset is put to use. Of course, once the useful life will start, the depreciation will commence. Once the useful life will start, depreciation will commence. It means, can I say, during this period, we depreciate the asset? During this period, we depreciate the asset. Okay. So can I say, from this date, we commence depreciation. We commence depreciation. Yes, sir. Yes, sir. Any doubt? No doubt. Means one thing is clear that during this period, we started using the asset. We will use the asset during this period. We use the asset during this period. Now, when you use the asset, some further expense will be incurred on that asset. So that some further expense, yeah, some further cost will be incurred on that particular asset because you are using the asset. That type of cost is known as subsequent cost. We call it subsequent cost. Correct. Now, these subsequent costs are of three types. One is day-to-day servicing cost. Second is replacement cost, and third is some inspection cost. I'm not discussing that, but one doubt will come. This subsequent cost will be capitalized. or it will be charged to PL as an expense. Then we need to discuss whether the subsequent cost will be capitalized, so when to capitalize, whether it will be charged to PL as an expense, so when to expense, that we are going to discuss. Okay, yes sir, chalega. Now once the asset is ready for use, then we'll start its subsequent recognition. So till the asset useful life is over, we'll do subsequent recognition. So normally from the date when the asset is ready for its intended use till the end of its useful life, we'll do subsequent recognition. Subsequent recognition means what will be the carrying amount at the end of each year. What will be the carrying amount at the end of each year? Now, what AS10 says that for subsequent recognition, we have two models. One is cost model, one is revaluation model. Now, what is cost model, what is revaluation model, that we are going to discuss in this chapter. Okay, understood? Yes sir. So initial recognition over, we'll start subsequent recognition. Now once the useful life is end, this is the end of useful life. So once the useful life is over, there came in two situations. Either no future economic benefit, means the end of useful life is the end of economic life. If the end of useful life is the end of economic life, it means useful life and economic life are the same, then it cannot be sold, and then at this point of time we will de-recognize the asset. But quite possible end of useful life is not the end of economic life, means it can be sold. It can be sold to other person, correct now? It is quite possible at this point of time it will be retired from active use and held for sale, and after some point of time it is actually sold. Let's say it is sold. So once it is sold, we will de-recognize, will apply de-recognition principle, we will de-recognize the asset. So how to de-recognize the asset, that we are going to understand this in this AS10. You can see this become the entire life cycle of a property, plant and equipment. So what we are going to discuss? First, initial recognition, initial cost, which cost will be capitalized, which cost will be charged to PL as an expense. Then subsequent cost, whether subsequent cost will be recognized as an expense or it will be capitalized. Then subsequent recognition, then retirement, and then this is known as retirement. Retired na? I say retired. Retired means retirement. Then retirement. Okay, sir. Retirement. Okay. And then de-recognition. This is the entire AS10. Now, only this accounting standard 10 is little big. Correct? Big in what? Content. It is very having large content. Why? Because AS10 is a copy paste of International Accounting Standard 16. It is similar to IAS 16. IAS means International Accounting Standard 16. Because it is recently revised, and AS10 is totally copy paste of IAS 16, and therefore for us it is big, means we'll do a lot of discussion in that. If you understood AS10, believe me, most of the other accounting standard it will be very easy for me to explain. Therefore, I'll take some time in accounting standard 10. Once AS10 you have understood, it will become very, very simple for you to understand balance accounting standard. Okay, sir. So I'll be slow and I will take my time to give you concept, to give you understanding about accounting standard 10. First, have you understood this? We will start with initial recognition. We will start with initial recognition. So when I say initial recognition, so either PP can be acquired or it can be constructed. So either acquired in monetary consideration, or we'll say non-monetary consideration. When I say monetary consideration means in cash, non-monetary consideration means in exchange of other asset. Okay. So monetary consideration. Now when I say monetary consideration, it can be either in cash or in credit, in cash or in credit. Non-monetary consideration means in exchange of other asset, in exchange of other asset, or in exchange of shares. Understood? Means you purchase old car in exchange of new car, or you purchase you purchase new car in exchange of old car, or you purchase car by allotment of equity shares. So these two conditions, these two situations may arise. Then when I am saying constructed means self-constructed, or it can be also acquired. Where do you write down? It can be acquired under lease. It can be acquired under lease. Now this is covered under AS 10. This is covered under AS 10. This is covered under AS 10. This is not covered. Not covered. This is covered under AS 10. This is also not covered. Not covered under AS 10 because this is covered under AS 19. Coming soon. So any PP acquired under lease will be covered under AS 19. And any PP acquired in exchange of any shares, no accounting standard. So actually I will say AS 10 is silent and there is no accounting standard. There is no accounting standard for this. So of course there is no accounting standard. This type of question they will never ask in exam. This is the entire picture I have sent. So when I say initial recognition, now we have to find out what will be the cost price at a time of initial recognition in different case. What is the cost price when the PP is acquired in cash, when the PP is acquired in credit, when the PP is acquired in exchange of other asset, when the PP is constructed. Got this point? Yes sir. This is our objective right now. Any doubt? No doubt. So we are going to start with initial recognition. You can see initial recognition, measurement at initial recognition at its cost price. Means initially any property, plant, and equipment will be recognized at cost. So what do you mean by cost? So our AS 10 says cost means cash price equivalent. So what is the meaning of cash price equivalent? What is the meaning of cash price equivalent? Let me explain what is the meaning of cash price equivalent. So right now we are discussing about what is the meaning of cash price equivalent. Right now When you are acquiring, yeah, you purchase an asset. So either you will purchase in cash or you purchase in credit or you purchase in credit. Credit means what? Deferred payment. Credit means deferred payment. Correct. Cash means, of course, immediate cash payment. Immediate. Correct. Are you getting what I am saying? Now let's say purchase price is equal to 10,000 if you purchase in cash. So what will be your journal entry? Your journal entry will have PP account debit to cash or bank 10,000. I think nothing to discuss. So this 10,000 become the cost price. Means if you purchase in cash, whatever cash payment you are making, that is the cost price. Okay, sir. Now coming to credit. Now in this case, there can be two situations. What is the situation? First, if credit period if the credit period is not more than normal credit period. Let's say normal credit period is 30 days. Means every business have some normal credit period, and that is predefined. That is the as per the custom of trade. For example, in our industry, there is no credit period. We always take in advance, and normally we don't allow any credit period. Normally, I am saying, but for other industries, the business might have some normal credit period. What is fine? So let's say normal credit period is equal to 30 days. In this case, if the credit period is not more than normal credit period, means 30 days only. My question to you all, if you are the vendor and I am purchasing a property, plant and equipment from you and you allowed me 30 days, whether you will charge 10,000 or more than 10,000 from me, बताओ. You will charge 10,000 or more than 10,000 from me for the sale of that particular property, plant and equipment. Got this point? If I purchase immediately on cash payment, correct now? So the purchase price for me is 10,000. Means sale price from your point of view is 10,000. Now you being a vendor, you have allowed 30 days credit to me. In that case, you will sell that item at 10,000 more than 10,000. Of course, 10,000 only. Because in this case, credit period is not more than normal credit period. Are you able to understand? And if you are charging more than that, then no one will come to you due to competition in the market to take the same price. Normally, as per the industry practice, in this case also, the payment will be 10,000. Payment will be 10,000. Correct. Payment will be how much? 10,000. But after how many days? 30 days. Payment will be equal to 10,000. And can you say this is the purchase price at normal credit terms? So this become, we call it purchase price at normal credit terms. We call it purchase price at normal credit terms. Okay, sir. And in this case, what will be my journal entry? Journal entry will be PP, account debit, 10,000. Right now, it is payable. We will say to payable, 10,000. Then at the time of settlement, we'll say payable, account debit, to cash or bank. How much? 10,000. Means in this case, also the cost price will be equal to purchase price at normal credit terms. Means whatever payment, means whatever cash paid, that will be what cost price. Correct. But coming to the last situation, if suppose if I say this way, credit period, if the credit period is more than normal credit period, then are you able to understand? Got this point? Have you understood? Means normally you provide 30 days, but I requested you that I will pay after 1 year, and I requested you, and just try to understand. You are here to do business. You will not say no. You are here to sell the item. So you will not say no. You will say okay. You want 1 year credit, but you will charge what? More than 10,000, because there will be some interest element. There will be some interest element, na? So you are also a businessman. You are not going to give me interest-free credit. You are not going to give me interest-free credit, because here I demanded credit period more than what, 30 days. If it is equal to 30 days, then of course you will not charge extra from me, because if you charge extra from me, I'll go to the other person for the purchase of that item, your competitor. Are you able to understand? But in this case, the credit period is more than what? Normal credit period. In that case, everyone will charge more. Understood? So in this case, since a payment will be more than 10,000, so let's say credit period is equal to 1 year. Let's say credit period is equal to 1 year. And let's say market rate of interest is equal to 10%. So of course, can I say we'll add 10%? 10% of 10,000 is means 1,000. So what will be the payment? So in this case, payment will be equal to 11,000. Understood. Now the question arises, if the credit period is more than normal credit period, the payment is 11,000. What is the cost price of PP? The cost price of PP will be 10,000, 11,000. What do you think? Think and say. Now you need to apply substance over form. We have discussed substance over form. Can I say in this case, what is the substance? The actual cost price 10,000, and whatever extra payment done, that is for financing purpose. Means whatever extra amount is paid over and above 10,000, that is 1,000. 1,000 is for financing purpose. So what is the substance of this transaction? That we have acquired the PP at rupees 10,000, and we are paying 1,000 for financing transaction. This is the substance of a form. We need to apply that also now. So as per substance of a form, what AS10 says that in this case, cost price will be equal to purchase price at normal credit terms only. The cost price will be equal to purchase price at normal credit terms, or can we say it is nothing but present value of future payment? Present value. This is the future payment. This payment is future payment. This will be paid after 1 year. 11,000. If discounted by 10%, how much it will come? So 11,000 minus 1,000, 10,000 only. Discount it. I have just given you the time value of money. If the 11,000 is future value at 10% for 1 year, what will the present value factor? You do 1.10 divide equal to, that is 0.909, multiply by 11,000. It will be approximately equal to 10,000. So what AS10 says that in this case, the cost price will be equal to present value of future payment. And that's why I have given you the concept of time value of money before starting this, because of this concept. Understood? In this case, cost price will be equal to present value of future payment. Present value of future payment. Understood? Correct. That is equal to 10,000. Of course, that will be equal to 10,000, and 10,000 is purchase price at normal credit terms only. It means what will be your first journal entry? Your first journal entry will what? PP, account debit, 10,000. What is the cost price? 10,000. And your payable is 10,000 only. And at year end 1, so suppose you purchase on 1/4. So on 1/4, what journal entry you have done? PP, account debit to payable. On 31st March, you will say interest expense. How much? 1,000. And you'll increase your payable to payable. How much? 1,000. And now your payable become 11,000. And at the end of 1 year, you'll pay 11,000. This is the journal entry based on substance of a form. Substance over form. Over form means even though in the invoice the price is 11,000, even though in the invoice, even though the contract is done at 11,000, but what our AS10 says based on substance of a form that cost price will be equal to the present value of future payment, and whatever extra payment you are doing over and above 10,000, that is interest element, that interest element will be charged to PL as an expense. Got this point? Have you understood the entire thing? Bolo. Any doubt? Have you understood this much? Bolo. I think you have understood. Have you written this much? Let us read what is given. What is given? The cash price equivalent means what? When the payment is not deferred beyond normal credit period, cost is the amount of cash and cash equivalent paid. Means whatever you have done payment, that is the cost price. Simple. Correct? Understood. Means I can say it is nothing but purchase price at normal credit terms. It is purchase price at normal credit terms. Okay, sir. But when the payment is deferred beyond normal credit period, then cost price will be equal to present value of all future payment, and this is also nothing but purchase price at normal credit terms. So when you will calculate present value of future payment, that will be nothing but it will be equal to what? It will be equal to purchase price at normal credit terms only. Correct? And can you say interest will be equal to future payment minus present value of future payment? And that interest will be recognized as an expense over the period of credit. Over the period of credit means if the credit period is 2 years, then that interest will be recognized as an expense over 2 years. If it is 3 years, over 3 years, unless it is covered under AS16. Unless it is covered under AS16 means what? It can be capitalized subject to the condition given under AS16. If the question is silent, this interest will be recognized as an expense over the period of credit. But if suppose some condition of AS16 is satisfied, then it can be capitalized. Now, when it will be capitalized, that will discuss under AS16. Have you understood this point? Super easy. Let me take one question. An entity acquired a plant for rupees 20 lakh on 2 year interest free credit. Now this is what? Contract. But will you apply contract? No, we'll apply substance. Will apply substance. Means substance will prevail over contract, and therefore this interest free credit is bakwas. Totally bakwas, because we don't do accounting based on contract, we do accounting based on substance, and because 2 years will be always more than normal credit period. Normal credit period cannot be 2 years. It will be always more than what? This 2 years will be more than normal credit period. So 20 lakh on 2 years, an appropriate discount rate is 10%. Calculate the cost price of plant. So can you say at 10% for 2 years? Can you give me the discounting factor or present value factor? So what you will do? You will do 1.10 divide equal to how many times? 2 times equal to how much it is coming? 0.8264. So what will do? 20 lakh multiply by 0.8264. How much it is coming? Because 20 lakh multiply by 0.8264, it will come this amount. Correct. To multiply by 20 lakh, how much it is coming? 16 lakh 52,893. Correct. So the cost price is 16 lakh 52,893. The cost price is 16 lakh 52,893 and the payment is what? Payment need to be done as per contract. It means we apply AS10 for this and for payment we do as per contract. Means payment is done as per contract but recognition of PP will be as per AS10. Means we are not doing accounting of payment right now. Payment will be done as per contract. Whatever you agreed, that much you will pay. So we are not saying that we will change the payment terms. We are not going to change the payment terms because that is mentioned in the contract. If you are ready, if you have already agreed, then you can't change that. We always say, Mia Bibi Raji to kya karega Kaji. Mia Bibi Raji to kya karega Kaji. Just it is as simple as whatever the terms has been decided, payment will be done based on that. But recognition of PP will not be done as per contract. That will be done as per substance and substance is given in under AS10. It will be the present value of future payment. The present value of future payment this amount. Now we'll add interest to interest of the first year. Will be 10% of this. This will be the closing balance at the end of first year. Then we'll add interest again. Normally the last interest always calculate as a balancing figure. Because of approximation, there can be some difference amount. So we'll say 20 lakh minus these. The last year, approximately same amount will come, but there will be some 2-3 rupees difference. So that difference amount, the balancing figure is coming 1,81,818. Okay, sir. The last year interest always calculate as a balancing figure. Understood this calculation? Nothing to explain. Super easy. So what will be journal entry? If I will say example we are doing. Example taken from AS Saran's book. AS book. What will be journal entry? They have not given the date. The date is not given. I am writing Y0. Y0 means what? At the beginning of the first year. Y0 means what? At the beginning of first year. Okay. Y1 means what? At the end what? At the end of first year. Y2 means at the end of second year. Correct. So at Y0, what journal entry? PP account debit to payable. It is 16 lakh 52,893. Or what you can do? You can do this way also. 20 lakh multiply by 0.8264. When I am saying 20 lakh multiply by 0.8264, it is coming 16,52,800. You can also write down 800 also. That is also correct. Understood. So 16,52,800. Because we are multiplying with 8264 now. We will do multiply with 8264 only. Then Y1 will record interest. We will say interest expense account debit to payable. Interest expense account debit to payable. So into 10%, it will be 1,65,280. 1,65,280. Then Y2 again interest expense account debit to payable. Now we'll take balancing figure. So whatever the compounded amount was coming, we'll do minus 20 lakh. So that will come 1,81,920. 1,81,920. The sum total of these three must be equal to what? 20 lakh. And now payment will be done. We'll say payable account debit to bank. Payable account debit to bank. How much? That is 20 lakh. Understood. Journal entry. So this is the cost price. Cost price. Understood. Now, if I will say depreciation, correct? Let's say, assume useful life is equal to 10 years, correct? So you say depreciation is equal to 20 lakh divided by 10 or 16 lakh 52,800 divided by 10. What do you think? You will do 20 lakh divided by 10 or 16 lakh? Of course, cost divided by 10 na. Cost divided by useful life. So what is your cost? Cost is 16 lakh 52,800 divided by 10. This will be your depreciation. So your cost price is 16 lakh 52,800, not 20 lakh. Understood. And the difference between 20 lakh and 16 lakh 52,800 was interest that is already charged to PL. It is already charged to PL as an expense. Okay, sir. Any doubt? Have you understood this journal entry? Yes, sir. Chalega. Simple. Simple. Can we proceed? Yes, sir. Now, if you have understood this much, so now we can come to the elements of initial cost. Elements of initial cost means what are included in initial cost, what are not included in initial cost. Already we discussed as per inventory AS2. Also we have discussed the component of cost price and what are excluded. Now we are discussing that only. So elements of initial cost, there are three elements A, B, C. A is purchase price. Purchase price same whatever we have discussed. In case of inventory, it is nothing but invoice price less trade discount rebate plus non-refundable duties and taxes. Can you say everything you know? You know invoice price, you know trade discount rebate, you know non-refundable duties and taxes. Means we are discussing about GST. GST means what? If refundable, don't add. If non-refundable, add. Everything we know. And whether it is refundable, non-refundable, that will be given the question. If question is silent, assume non-refundable. So if the question is silent, we'll assume it is non-refundable GST and we'll add it. We'll add it. Can I say nothing to discuss about this? You know about this, correct? Already we know that discount, settlement discount or cash discount are transferred to PL when received, that will be not reduced. And already I said if the question is silent, assume all duties and taxes are non-refundable. Correct it? Are non-refundable. Means by our own will not assume it is refundable. We'll add it if the question is silent. We'll add it if the question is silent. Okay, sir. The first element you have understood. Second element is the directly attributable cost. So what do you mean by directly attributable cost? Directly attributable cost means what? Incremental cost. We call it incremental cost. Incremental cost. Sir, we have also not understood what is incremental cost. Just write down now, I am explaining. Incremental cost. Incremental cost means what? Any cost which will be incurred only when that asset is acquired or constructed. Means any cost which will be incurred even though asset is not acquired, asset is not constructed, that is not incremental cost. So that is not directly attributable, correct? The incremental cost means what? Cost which will be incurred, when such PP is acquired or constructed. Correct? Understood. Now there are some ongoing expenditure. Ongoing expenditure means routine expenditure which will be incurred even though asset is not acquired or constructed. For example, you are paying some salary to your employee. Correct now? And that salary is engaged in the purchase of that property, plant, equipment. So your employee will pay even though that acquired, even though that PP is not acquired, you will pay salary or not. So salary is a part of ongoing expenditure, therefore that will not be added. Therefore that will not be added. So just write down. Ongoing expenditure are not incremental cost and therefore will not add ongoing expenditure. If you want to write down salary to employee, but sir, just try to understand whatever. Just try to, you have engaged one of your employee on acquisition of property, plant, equipment from foreign countries, and for that purpose you are paying some commission, extra commission to your employee. Now that commission, whatever is paid to that employee, that is only related to the acquisition of asset. Means if that asset is not acquired, you will not pay commission. it means it is directly attributable and therefore it will be capitalized. Got this point? So now I hope you understood what do you mean by directly attributable cost. So all costs are not directly attributable. Only directly attributable costs will be capitalized. Only directly attributable costs will be capitalized. Got this point? Yes, sir. There is cost incurred to bring the asset in present location and condition for its intended use. So in simple word, we can say any cost which are incurred to bring the asset in present location and condition for its intended use, but it will not include any ongoing expenditure. Correct? For example, employee benefit cost. So what do you mean by employee benefit cost? Means any payment done to employee. Means we are discussing about salaries only. Correct? Salaries. So employee benefit cost arising directly from construction or acquisition of PP. Of course, can I say in the case of construction of PP, there will be some direct labor. The labor engaged in the construction. So if you are making some payment to the direct labor, that will be added. That will be capitalized because that is directly attributable to bring the asset in present location and condition for its intended use, because that will be incremental cost. Acquisition, I have already said, commission paid to the employee. Yes, sir. Any transportation cost, of course, transportation cost will be added. Any installation expense, without installation you can't use it. So installation cost. Any assembly, sir, what is assembly expenses? For example, you want to construct aeroplane. You want to acquire aeroplane. Correct. Normally, whenever we acquire aeroplane, we don't acquire aeroplane, we acquire parts of aeroplane. Quite possible. So you purchase the parts of aeroplane, you brought all the parts in a present location, in any desired location, and then you started assembling it. So that is known as assembly cost, and assembly cost will be also added. Correct. Assembly cost will be added. Site preparation cost. Site preparation cost means suppose you are doing construction of building. Before construction of building, you need to level the land. That is known as site preparation cost. Of course, that will be also added. Cost of preparing and leveling of the land is an example of site preparation cost. Professional technical fee. Whatever technical fee you have paid for the acquisition or construction of that asset, that will be also added. Consultant fee, architect fee. Got this point? Any cost of testing. Testing cost is very important. Testing cost. Normally, whenever you acquire some expensive item, for example, you purchase a plant of rupees 5 crore. Okay, so first you need to be satisfied whether it will be functioning as per your desired level or not. Quite possible or not. So for that purpose, it is quite possible vendor might give you some trial run period, and they have given 15 days for testing purpose. Quite possible. Correct now. Now, if you purchase calculator, no one will give you testing period. If I purchase camera, no one will give me testing period. In that case, testing period will be nil. But if I am purchasing some plant, I am purchasing for the first time, and that is an expensive item, I may demand some trial run period. Correct? So in that trial run period, whether you have acquired it, no, before you are satisfied you have not acquired it, it is only for testing purpose. Now when you are testing that plant, you will incur some labor cost, you will incur some material cost, you incur some production overhead for production purpose. Correct now? So that is testing cost. So whether testing cost will be capitalized, like yes, that is also necessary to bring the inventory in present location condition for its intended use, and that is also directly attributable. So any testing cost will be capitalized. Any testing cost will be capitalized. But during testing period, quite possible you have produced some inventory. Suppose your testing cost is 1 lakh, and whatever production produced during testing period, you have sold it, and you can recover 10,000. And you have recovered 10,000. It means the net amount is 90,000. The question is that sale proceed of the produce during the testing period, whether it will be deducted and net amount will be capitalized, or only the gross amount will be capitalized, or AS10 says that net amount will be capitalized, means deducted from this 1 lakh and 90,000 will be capitalized. 90,000 will be capitalized. So whether the cost of testing, whether the asset is working properly after deducting the net proceed from sale of any product produced during the testing period. Important. The examples. These are the examples. I hope you understood. So what are the examples of directly attributable cost? Can you repeat with me? First is what? Employee benefit cost arising directly from construction or acquisition of asset, transportation cost, installation cost, assembly cost, site preparation cost, professional technical fee, cost of testing after deducting the sale proceed. Okay, sir. This was the second. So point number A you understood, point number B you understood. I think no doubt about point number A and point number B. Point number C is interesting. Point number C, what they want to say? Any initial estimated initial estimated cost of dismantling and removing the item or restoring the site on which it has been located. Sir, no sir. ये क्या है sir? What is this? Initial estimated cost of dismantling, removing or restoring the site wherever it has been located. Sir, not able to understand. Let me take one example. You will say whether such cost should be capitalized or not capitalized. Right? So don't think about AS10. Apply your common sense. Apply your common sense. Okay. Suppose you purchase one AC. I am giving one example. Example 1. You purchase one AC. There is a purchase price. Then you incur some transportation cost. Then you brought into your premises and then installed it. This is installation cost. You can say this is purchase price will be capitalized, transportation cost will be capitalized, installation cost will be capitalized. Okay. This is A, this is B, this is B. Correct. A is purchase price, B is the directly attributable cost. This much to we have understood. Now the question arises, just try to understand. Once it is start, you will start using it because it will be ready for use. Correct now. But on the date when it was ready for use, what you are thinking? Just try to understand. If once it is installed, is it ready for use? Once it is installed, it is ready for use. Correct. But on the date before use, what you are thinking? That at the end of useful life, the asset will be of no use. Correct. So you need to dismantle it. The AC you need to dismantle. So you need to incur some dismantling cost after useful life, after the end of useful life. Correct now. You dismantle it, then remove it. Once dismantle, then remove it. You need to incur some removing cost. Correct. And then you need to restore the wall wherever it has been located. Because once you dismantle it, the wall might be destroyed. You will restore it. Correct now. It means you are incurring 3 expenses at the end of useful life. So at the end of useful life, can I say there will be dismantling cost. Means this is the date of acquisition. This is Y0. This is Y10. So here you have incurred purchase price, suppose 1 lakh. You have incurred purchase price 1 lakh. Then you have incurred transportation cost 10,000. Then you have incurred installation expense 10,000. So there is no doubt about 1,20,000. Correct. Now, right now you are standing यहाँ पर. This is your future. This is your future, na? This is future. And right now you are thinking. What you are thinking? That at the end of useful life, you will incur dismantling cost. removing cost, and restoration cost. Correct. But we don't know the actual. We need to estimate it. And suppose you estimated it, and as per estimation at the end of useful life. Now, sir, estimation, how can we estimate? Just try to understand. In accounting, we can estimate. You can't say right now that we can't estimate. Okay, you can estimate by taking the help of expert. And suppose you have estimated also the dismantling cost, removing cost, restoration cost will be 20,000. Correct. Now the question arises whether this will be also capitalized. Correct. Whether this will be capitalized, yes or no? What do you think? Don't think about AS10 right now. I have just asked one common sense question whether you will capitalize or you will not capitalize. What do you think? What do you think? Yes or no? Means right now you purchase, transported, and then installed. You started using it. Now you are thinking at the end of useful life, when the useful life will over, we need to incur this much expenditure, which may be 20,000. So should we capitalize 20,000? Yes or no? Of course, we should not capitalize. No capitalization. No capitalization. So why will capitalize? No capitalization. Correct? It will not be capitalized. But let me give you one more question. This though I think no. Why it will be capitalized? It will not be capitalized. It is an estimate cost which is not yet incurred right now. Why you will capitalize? But like just I will change the case scenario. I will change the case scenario and think. Now think logically. Suppose I have taken one building on rent. Building on rent. Okay. Understood. And as per lease agreement, or you can say rent agreement, the lease term is 10 years. And as per agreement, building will building shall be vacated after 10 years and and handed over to owner and handed over to the owner in its original condition. Original condition means as it was given should be returned back as it was originally given. Correct? Have you understood? This was the rental agreement. Now I have purchased this building. This was the open floor, but I will use this floor for my academy purpose. So what I have done? I have constructed artificial wall and I have done some renovation also. Correct? And this entire expenditure is equal to 10 lakh. Got this point? Of course, this will be capitalized. This will be capitalized. We are not discussing about this expenditure which has been incurred to construct this artificial wall and the renovation expenditure, whatever I have incurred, that will be capitalized. Understood? But right now, once we have incurred this expenditure, can you say as per contract there is an obligation, there is an obligation or not? There is an obligation to dismantle it. Correct now. There is an obligation to dismantle, remove, and restore the building in original condition at the end of what? At the end of 10 years. Bolo yes or no? Once you have incurred this expenditure of 10 lakh, there is an obligation to dismantle it. Obligation is there because you have done one contract. Just try to understand, in your AC wala example, there was no contract to dismantle. You have installed the AC, you started using it, and now we do not have any obligation to dismantle it. And if there is no obligation, the question of liability will not arise. Obligation means to pay. You need to incur that expenditure. It means there is no liability. Correct now. But in this case, when I am saying no capitalization, why? Because there was no obligation for such expenditure. There was no obligation for such expenditure. And if there is no obligation, there is no liability. But just try to understand, there is in this case, there is a contractual obligation for such expenditure or not. Yes, so there is a contractual obligation for future expenditure or not. Yes, there is a contractual obligation. Yes. And if yes, then AS 29 will be applicable. Right now we have not done AS 29. AS 29 is for provision, contingent liability and contingent asset coming soon in your life. So there is a contractual obligation. There is a contractual obligation. There is a contractual obligation. So AS 29 says that we need to recognize a provision. We recognize a provision for that future expenditure because already we have done one contract. And once we have done one contract, there is a past event, and because of that past event, there is a future obligation. Yes or no? So there is a future expenditure arising from past contract or not? Yes. Expenditure, correct, arising from past contract. Are you able to understand? So AS 29 will be applicable. Detailed discussion about AS 29 we'll do under AS 29. Right now only you need to understand, yes, we need to recognize provision, and when you are supposed to recognize provision, so you will say to provision for such expenditure. Correct. Now you only say provision should be at what amount? Suppose the estimated amount, this estimated amount is 10 lakh, and this will be incurred at the end of 10th year, but we are recognizing this provision right now. So this provision should be created at future amount of present value. So we'll recognize this provision at present value of rupees 10 lakh. Present value of rupees 10 lakh. You understood why I have given you the time value of money initially. This was the point. If I would have not done that, then I need to give what? Some concept without any logic. But now I hope you understood it, because this 10 lakh will be incurred after 10 at the end of 10 years. Right now you are recognizing. So this journal entry you are doing at Y0. So two provision. This is as per AS 29. So what AS 29 says, that you need to recognize the provision at present value of future expenditure. At present value of future expenditure. Correct. And now what AS 10 says, that this amount will be capitalized. So we'll say property, plant and equipment account debit to provision. So this future expenditure because there is an obligation to incur that. And can you say the benefit of this future expenditure will be derived in this 10 year only? Correct now. Even though this will be incurred at the end of 10 years, the benefit of this will be arise, this will be derived over the 10 year only, and therefore it should be capitalized with the cost price of asset. So what AS10 says that it will be capitalized. It means there are two accounting standards, PP as per AS10, provision as per AS29. Provision as per AS20. Right now we are discussing about PP, and therefore what AS10 says that any initial estimated cost of dismantling or removing the item or restoring the site wherever it has been located will be capitalized at present value of future expenditure. At present value of future expenditure. Have you understood this point or not? Have you understood this point? I hope you will appreciate this example. But there must be an obligation for future expenditure. If there is no obligation for future expenditure, then no capitalization, because there will be no provision. You will create provision only when there is an obligation. If there is no obligation, why to create provision? Detailed discussion about AS29 provision will do under AS29. Got this point? Now let us come. What they are saying? Initial estimated cost of dismantling and removing the item or restoring the site on which it has been located. We call it decommissioning, restoration, and similar liability. A name has been given to this liability. We'll call it PYQs DRSL. Decommissioning, restoration, and similar liability. We'll call it PYQs DRSL. Decommissioning, restoration, and similar liability. So what AS10 says that if the obligation can be contractual or legal. It can be due to contract or due to any act. If obligation of DRSL has been incurred, already there is an obligation. When item of PP was acquired or during the period when the item was used, means either it was incurred when you have acquired it or during the period of use, it will be capitalized to the cost price of PP. Amount will be estimated as per AS29, and AS29 says at present value of future expenditure. At present value of future expenditure. Got this point? Correct. But if there is no obligation of DRSL has not been incurred, then there is no capitalization, it will not be capitalized. From examination point of view, whenever they say about DRSL, it will be always capitalized even though question is silent. If the question is silent, always capitalize it. If the question is silent, always capitalize it. Okay, sir. Have you understood? This is point number C. Correct. Chalega. So point number A was very simple, purchase price. Point number B was directly attributable cost. Point number C is what initial estimated cost for dismantling, restoring, and dismantling, removing or restoring the site wherever it has been located. PYQs we call it DRSL. Chalega. We'll take one example, then we'll take a small break. On 1/4/2017, a PP was acquired for rupees 50 lakh subject to a trade score of 10% and GST of 18%. Credit of GST is not available. It means non-refundable. It will be added. At the directly attributable cost of 5 lakh, useful life of PP is 5 years. As per applicable law, means legal obligation. There is a legal obligation. PP need to be dismantled at the end of useful life. Estimated cost of dismantling 6 lakh, means this will be incurred after 5 years. Appropriate discount rate is 10%. Can you give me what is the present value? You only calculate present value at a rate of 10% 5 years. You will calculate right now. If you can calculate correctly, means you have understood present value concept. So 6 lakh is future value, and that will be incurred at the end of useful life. Useful life is 5 years. It will be incurred after 5 years, and the rate of interest is 10 years. What you will do? 1.10 divide equal to how many times? 5 times. 1, 2, 3, 4, 5. It means 6 lakh multiplied by 0.621. If you want to give 3 decimal, if you want to give 4 decimal, we'll do 6209. whatever you want to do. Either take 3 or 4 decimal, chalega. It is 6 lakh into 0.6209, that is equal to 3,72,540. You can see what they are done. Let us check. Solution. So what is the invoice price? 50 lakh. Less trade discount at the rate of 10%, 5 lakh, it becomes 45 lakh. We'll add GST. GST will be always calculated after deducting discount. Means 18% of 45 lakh is 8 lakh 10,000, because it was non-refundable, it will be added. This will become purchase price. Now in purchase price, we have added directly attributable cost and initial estimated cost of DRSL at present value is 3,72,540. Correct? So this becomes the total cost price. This becomes the total cost price. Easy. Understood? Chalega? Bolo. It means only for your understanding. This is example from AS Saran's book. Just write down, also write down page number. Okay. AS book. What will be journal entry? Journal entry. So PP account debit at cost price. Cost price is what? It is 61,82,540. So 61,82,540. How much provision? Provision for DRSL. How much provision? 3,72,540. And for other payment, we'll assume it is paid. You can also assume it is payable, but let us assume it is paid. So to cash, or you can add on payable minus 61 lakh. How much? It is 58 lakh 10,000. Correct. So what I just want to say, on this PP AS10 will be applicable, and this provision AS29 will be applicable. So right now I am not discussing about provision, I am discussing about only PP. The cost price is 61,82,540, and this will be depreciated. This will be depreciated over 5 years. This will be depreciated over 5 years. Understood? Have you understood? I hope you have understood. So you have understood the initial cost price. Chalega. We'll take a small break. After break, we'll discuss the balance part. Chalega. Okay. Yes, sir. Now, can we start once again, everyone? Okay, sir. Before break, we are discussing about elements of initial cost. We have understood it include purchase price, directly attributable cost, and a new point came in our life about the initial estimated cost of dismantling, removing, or restoring the site where it has been located. One thing we have understood that this will not be capitalized every time. If the obligation of DRSL means what? Decommissioning, restoration, similar liability has been incurred when the item was acquired, then it will be capitalized. But amount will be estimated as per the requirement of AS 29. And as per AS 29, it will be recognized, means it will be capitalized at present value of future expenditure. Future expenditure will be given the question. The rate of discount will be given the question. You can calculate present value. Okay, sir. Means for this, the journal entry will be PP account debit to provision. PP account debit to provision. If there is no obligation of such expenditure, then it will not be capitalized. Okay, sir. However, from exam point of view, that information is given will be always capitalized. We'll take some question, but let me complete some more point. Leave this point right now. Point number 3. I'll come back again. This point, just give star mark. Come to point number 4. Self-constructed asset. Now, when I say constructed asset, of course, can you see the element remains same? But here, will not purchase the item, will purchase the raw material for construction purpose. For example, if you are doing building construction, you will purchase the raw material. They will incur direct labor and there will be some construction overhead. All will be capitalized if they are directly attributable. So what AS10 says that element remains same as we have discussed for acquired asset. However, in this case, there are two type of cost. One is known as specific cost. Specific cost which is specifically related to that construction activity. Or there may be some allocable cost. Allocable costs are those costs which are incurred for two or more than two construction activity. In that case, the construction cost will be allocated as per the information given the question. It can be specific, it can be what? Allocable also. So allocable will be allocated as per the information given the question. Means to just explain you, when I say property, plant and equipment, it can be acquired, it can be constructed. So when I am saying acquired, it will include purchase price, then we'll add all the directly attributable cost, then we'll also add present value of estimated, I'm writing DRSL, chalega, DRSL. So this will be what the cost price of acquired asset. But if it is constructed, we need to find out what is the direct material, there will be direct labor, now there will be some construction over it as we have done in inventory production over it. So here it will be construction over it. Then of course, can you see, there will be some directly attributable cost and they may be also present value of estimated DRSL. So this will remain same now. I am just making copy paste to save my time. You can't do copy paste, you need to write down full. Okay, that benefit I have. We'll add this also and this will become the cost price. This will become the cost price. Correct. Chalega. Any doubt? The same thing is given. You can read whatever is given. Cost of self-constructed asset. will be calculated as same principle as discussed about. However, the component of cost will be either specific as well as allocable cost of construction. However, there are some special point. First special point is the understood point. Any abnormal loss will not be capitalized. It will be charged to PL as an expense. So any abnormal loss during construction activity should be excluded. Of course, we'll exclude it and charge it to PL account as an expense. So this will be expensed. Then any internal profit included in the cost should be eliminated. So what is internal profit? Let me explain. Suppose an entity has two departments. One is department A, one is department B. The department B is engaged in the construction of PP. So they want raw material. So they will purchase raw material from what? Department A. They will purchase raw material from department A, and department A will purchase raw material from external market. From the market, they will purchase raw material. Now suppose they purchase raw material at rupees 100. So this is the cost price of department A. But when they are transferring to department B, what they are doing? They are transferring at 100 plus 20. So what is the cost price for department B? It is 120. Correct now. It means when department B is finding out the cost price of construction, they will add direct material 120. But this 120 include profit of what? Department A, which is known as internal profit. Internal profit, because when I am saying AS10 we are applying for department B or for the entire company as a whole. That is for the entity as a whole. So for entity as a total, what is the cost price? Cost price 100, not 120. Got this point? So when you are calculating cost price from entity's point of view, that internal profit should be eliminated. That information AS10 want to give to you. Just try to understand. So what they are saying, your cost price will be 100, not 120. That internal profit should be excluded. So internal profit should be excluded. That only they want to say. Understood point. I will say common sense point. But you were not knowing about this department, or I have just explained from departmental point of view. Okay, sir? Yes, sir. Chalega. This point also you have understood. Then point number 3. Let me ask you one question. Let's see what you are saying. This entire thing is based on case study. Means whenever I am asking any question, at that time you become chartered accountant and think like a CA, your answer will be correct. Okay, let me take one more example. Suppose you started one construction activity, but construction activity was actually in two phases. This is phase 1 and this is phase 2. And right now there is no construction activity. No construction or development in phase 2. So what entity has decided? Entity has decided to give this land, vacant land, because right now it is of no use. Correct now. For parking purpose. For parking purpose to general public. So of course they will incur some expense for that, and they will generate some income from this parking. Now the question arises, this amount, net amount, whether it can be capitalized to the construction cost, yes or no? Can I say no, because this is not directly related to the construction activity. This is an incidental operation of the entity for the time being, and therefore what AS10 says that it will be transferred to PL account and it will not be adjusted with the construction cost. Simple point. Understood? Yes, sir. Correct. What they have given? Any income and the related expense of any incidental operation that may occur before or during the construction or development of an item or PP are recognized in PL. For example, income may be earned through using the building site as a car park until construction starts. Simple example. Correct. Let me give you one more example. Example number one. This example number one example you understood. Come to another example. Come to another example. Suppose you acquired one building, land and building, but this was old building. Correct. Which you can't use it. Which you can't use. So you need to demolish old building. You need to demolish old building. So there will be some demolition cost. And whatever demolition material means whatever salvage material be there, that will have some scrap value. So you may realize from the sale of scrap material. So there will be some realizable value of scrap. Correct. And then you will start the construction of new building. So the question arises demolition cost of old building and whatever income you have generated from the sale of scrap material, whether it will be adjusted the construction cost of new building. Yes or no? Yes, because okay, this demolition is directly attributable to construction of new building. Why you demolish old building? Because you want new building. Means this would have not been incurred if there was no demand of new building. Got this point? Yes, sir. And therefore, it will be added. The net amount will be capitalized. Net amount will be capitalized. Chalega. That is only given. Check karo. Income earned during the development of PP, not directly attributable to the asset. Example, car parking rental income, recognized as income in SOPL. Directly attributable income, example, sale of scrap material on demolition in case of redevelopment, adjusted from the cost of PP. Adjusted from the cost of PP. Okay, sir. Chalega. Let me take one question. First, come to question number 20. Measure Versatile Limited purchased machinery for rupees 4,80,000, inclusive of excise duty. Now, excise duty can be GST of rupees 40,000. Credit is available for 50% of the duty paid. Means 20,000 available, 20,000 not available. Means you can add only 20,000. The company incur the following other expense of installation, cost of preparation of site installation, it will be capitalized. Total labor charges will be capitalized, but 200 out of 600 man hours worked were spent for installation of machinery. It means what you'll do? You'll do 200 divide by 600. You'll do so 66,000 into 200 divided by 600 means you can capitalize only to the extent of 22,000. Spare part and tool consumed in the installation, yes, it will be capitalized. Total salary of supervisor, of course it will be capitalized, but time spent for installation was 25% of total time work. So this will be 25% of 24,000. Total administrative expenses 110 relate to the plant installation. So it is directly attributable. So you will do 1 by 10. Test run and experimental production expenses, of course it will be capitalized. Consultancy charges, yes, it will be capitalized. Depreciation asset used for the installation, whether it will be capitalized. Means you are using some asset for installation. So of course depreciation of that asset will be capitalized. Yes, it will be capitalized. Very important. Normally you will do mistake in this. The machine was ready for use on 15 Jan. So 15 Jan is the date when the asset is ready for use, but was used from 1 to 2015. This date is not at all relevant. Your depreciation will commence from 15 Jan, not from 1 Feb. Due to this delay, further expense of 19,000 was incurred. This will be charged to PL as an expense. Already I have said any expense incurred from the date the asset is ready for use till the date asset was actually put to use will be charged to PL as an expense. Calculate the value at which the plant should be capitalized. Same thing is given. Check karo. 4,80,000. Then sorry, inclusive of GST, the minus 20,000 will do because 40,000 is included. So minus 20,000. You can see less send back credit receivable. 20,000 they have deducted. Then site preparation cost 21,000 fully added. Then labor charges we have already calculated 22,000. Then 6,000 will be totally added. Then 25% or 24,000, 6,000 will be added. Then 1/10 of 32,000, 3,200 will be added. Then 23,000 will be fully added. Then 9,000 will be fully added. 12,000 will be fully added. This is the cost price. Can I say for this my plus minus? But I will write. If I am writing, there is a time wasted. You can do by own. So there are some questions where I will not write that solution is given. You can understand by own. I need to only discuss. So I am discussing that part. What to plus, what not to plus. Yes, sir. Chalega. Expense of 19,000 from this date to this date will be charged to PL account as plant were ready for production on 15 Jan. Chalega. Yes, sir. One more question will take. Question number 23. X Limited started construction on a building for its own use on 1st April 2000. The following costs are incurred. Means whatever questions we are doing now, just round to a circle. Because this question number 20 we have done. Now we are doing question number 23. Okay. Yes, sir. The following costs are incurred. Purchase price of land will be added. Stamp duty and legal fee will be added. Architect fee will be added. Site preparation cost will be added. Direct material will be added. Direct labor cost will be added. General overhead will not be added. General overhead means ongoing expenditure that will never be added. It is not directly attributable. Correct. Other relevant information, material costing rupees 1 lakh has been spoiled and therefore wasted, and further 1,50,000 was spent on account of faulty design work. Okay, this is abnormal loss. If there was some matter which was spoiled, abnormal loss. Some wasted and therefore wasted, and further 1,50,000 was spent on faulty design, means 1 lakh plus 1,50,000 you deduct. So your total material cost will be 10 lakh minus 2,50,000 is equal to 7,50,000. This much will be capitalized. As a result of this problem, work on the building was stopped for 2 weeks during the November 2000, and it is estimated that 22,000 of the labor cost relate to that period. The labor cost relate to that period means it is also abnormal loss. If there was no production, if there was no construction, and then also you need to pay to your labor, there is abnormal loss. So here you will do 4 lakh minus 22,000. The building was completed on 1st Jan 2001. So this is the date when the asset is ready for use. Brought into use, this date is not at all relevant. X Limited had taken a loan of rupees 40 lakh on 1st April 2000 for the construction building. The loan carried an interest rate of 8% per annum and is repayable on 1st April 2002. Calculate the cost of building that will be included in tangible non-current asset as an addition. I think no doubt, only one doubt will come about interest cost. Whether interest cost will be capitalized or will not be capitalized. You can see apart from that you have understood 30 lakh, 2 lakh, architect fee, everything. This is 10 lakh minus 2,50,000. This is 4 lakh minus 22,000, and general overhead will not be added. Only I need to explain borrowing cost. So just write down borrowing cost. Borrowing cost. Borrowing cost means AS16. AS16. Borrowing cost means we are discussing about interest cost. Interest cost. Now what AS16 says that? What AS16 says that if property, plant and equipment is a qualifying asset, then borrowing cost will be capitalized. But if PP is not a qualifying asset, borrowing cost will not be capitalized. Once again, detailed discussion we'll do under AS 16. I hope you're understanding. Correct now. I mean, right now I'm just explaining from this question point of view. Means in AS, one question can be in combination of other accounting standard also. It means we become expert only when entire accounting standard is completed. Got this point? Now, so what is qualifying asset? Qualifying asset means what? What they want to say. If any asset takes more than 12 months for getting ready, it will be always a qualifying asset. Always a qualifying asset. If any asset takes more than 12 months for getting ready, it will be always a qualifying asset. But if any asset takes less than 12 months for getting ready, then it may or may not be a qualifying asset. May or may not be a qualifying asset. Means it depends upon management judgment. Depends upon management judgment. Correct? Means for this we need to take assumption. Take assumption. Means can I say the ball will be in your court? You may assume the given PP is a qualifying asset or not a qualifying asset as per your assumption. Right now, let us see. The construction was started on 1st April 2000. It was completed on what? 1st Jan 2001. It means it is what? 9 months. So 9 months, it is less than 12 months. So of course, it requires judgment. And as per the solution given the question, what they have written, period of construction of building is only 9 months. Borrowing costs are not eligible for capitalization because it is not substantial period. Means what they have assumed, it is what? Not a qualifying asset. And because of that reason, they have given this. Are you able to understand? Correct. So it become very simple question because borrowing cost will not be capitalized, so no calculation required. No calculation required. Correct. But suppose in the given question it was mentioned this PP is a qualifying asset, then you need to add borrowing cost. In that case, what we'll do, I need to explain. Chalega. So question number 23. Only I am explaining the borrowing cost part. Only I am explaining the borrowing cost part. Right down. We are doing question number 23. If PP is assumed to be not a qualifying asset. QA means qualifying asset, right? Of full. Not a qualifying asset. entire borrowing cost will be charged to PL as an expense. But if assume to be a qualifying asset, then what? Correct now. Assume to be a qualifying asset. In that case, first we'll find out total borrowing cost. Total borrowing cost. Here BC means borrowing cost. Okay. The loan was taken on which date? You can see X Limited had taken loan at the beginning of the year. First April 2000. Correct. And it is not yet repaid. It is not yet repaid. So for the entire 12 months, the borrowing cost, what is the loan amount? Loan amount is 40 lakh into 8%. 40 lakh into 8%. So 40 lakh into 8%, it is 3 lakh 20,000. Out of that, debt will be capitalized for how many period? Capitalized. You need to find out construction period. Construction period 9 months. But out of 9 months, you can see for 2 weeks there was no production. So what our AS16 says that when there is no production, no construction, no activity, for that period will not capitalize borrowing cost. You can see for the 2 week it is given now. For the 2 week means for the half month there is no capitalization. Got this point? Because it was an abnormal loss period. So for abnormal loss period we can't capitalize borrowing cost also. It is as simple as for we have not capitalized abnormal loss, direct material and labor cost also. So for that period we also not capitalize borrowing cost. It means we'll capitalize only for 8.5 months. We will do 40 lakh into 8% into 8.5 divided by 12. That is 2,13,300. A minute. It is 2,26,667. Means how much will be charged to PL as an expense? The difference, that is 93,333. Can I say because of this reason the question quality increases? It is quite possible it is mentioned, it is given the question that consider PP as a qualifying asset, then you can't say borrowing cost will not be capitalized. So I have just informed you if the same question is coming with a different assumption, then you need to answer as per that assumption. However, if question is silent, for simplicity you can also assume that it is not a qualifying asset and borrowing cost will not be capitalized. However, let us refer AS16 for better understanding. Write down, even though you want to write down refer AS16. In that we'll do detailed discussion about that. Chalega. This also you have understood. Can we move? Yes, sir. So I am taking good questions. I am not taking simple question. Okay, sir. Chalega. Come to question number 3. Christie Limited constructed with a supplier to purchase machinery which is to be installed in its department A in 3 months time. Okay, sir. Special foundation were required for the machinery which were prepared within a supply lead time. Okay. The cost of the site preparation and laying foundation was this. This will be capitalized site preparation cost. This activity was supervised by a technician during the entire period who is employed for the purpose for 45,000 per month. So 45,000 per month, to understand, it is in 3-year time, 3-month time is to be installed in his 3-month time. So of course what we'll do? We'll do 45,000 into 3. This will be also capitalized. The technician services were given by Department B to Department A, which billed the service at 49,500 per month after adding 10% profit margin. You can see 45,000 into 10%. It is 49,500. So will you include this 4,500 profit? No, that is internal profit, and therefore 45,000 per month means into 3 will be added. So this is totally bakwas because internal profit will not be added. Internal profit will not be added. Understood? The machine was purchased at this inclusive of IGST of 12% for which input credit is available to Srishti Limited. It means it is inclusive. So this is, can I say, 112%? Inclusive of IGST at 12%. So can I say 100 plus 12? So this is 112. So how much 100? What will say? We'll do into 100 divide by 112. You'll find out what? The cost price excluding what IGST? It is 158 34,000 into 100 divided by 112. It is 1 crore 41 lakh. You can see that much is only added. 1 crore 41 lakh 37,500. Interesting. So you need to what? Exclude GST. The GST is 12%. So what is 100%? Okay, sir. Then 55,770 transportation charges were incurred to bring the machine to factory side. Of course, that will be also added. An architect was appointed 30,000 to supervise the machinery. That will be also capitalized. 30,000 will be also added. A certain amount at which machinery should be capitalized under AS10 considering the IGST credits availed by CST Limited. Internally book profit should be eliminated. Even though not given, it will be eliminated. So you can see we have done 45,000 into 3 and site preparation cost will be also added. This become the cost price of the asset. Good question. This type of question can be asked in multiple choice question of 2 marks also. Okay, sir. Question number 3 also done. You can see we have done question number 3 also. Chalega. Yes, sir. Correct. Now coming to next point, point number 5. When to cease capitalization? When to cease capitalization? Already I have said, will cease capitalization once the asset is ready for its intended use. Once the asset is ready, then no capitalization. Then will not do any further capitalization. The recognition of cost in the carrying amount of an item of PP cease. Cease means will stop when the item is ready for its intended use. When the item is ready for its intended use. Understood? I think no discussion required. Then what are excluded from cost price? Already I said any cost, just type it, any cost which is incurred during initial recognition but which are not directly attributable, excluded. Or any cost which are incurred after the asset is ready for its intended use, that will be also excluded. Correct now. So they have given some example and this will be charged to PL as an expense. Example of cost that are not cost of an item of PP are. These are only an example. Can you see, even though you have not read it, if you have understood conceptually, you will be able to understand whether it will be added or it will not be added. Correct. For example, cost of opening new facility. Cost of opening new facility. Let me take one example. I have designed this studio for my recording purpose. And because this is a new studio, so for promotion activity, I have given one inauguration party. So I will incur some inauguration expense. Whether I will capitalize it? No, because that is cost incurred after the asset is ready for its intended use. So any inauguration cost will not be capitalized. Cost of opening new facility will not be capitalized. Staff training cost. Normally students are confused about this. Suppose I purchase a camera. Now I need to train my staff how to operate this camera and I need to incur some training expense. So whether that will be capitalized? No. Just try to understand. Camera was ready for use. I have trained my employee so that they can operate the camera, will not enhance the camera. Correct? It is already ready for use. Got this point? So it will be also charged to PL as an expense. But this is most confusing example. Normally student do mistake here. Any advertisement and promotional expenditure, if you are doing some advertisement and promotional expenditure, that will never be capitalized. It will be charged to PL as an expense. Administrative and other general overhead costs will not be capitalized. That will be also charged to PL as an expense. Initial operating loss. Here also students are confused. Initial operating loss. Now, initial operating loss means what? I started a new academy. But initially, I will incur some loss only, because if I started a new academy, I have done some capital expenditure to start a new academy. So initially, student may not come. So I need to incur some loss. Can you capitalize that loss? No, that is your operation loss. Operation loss will be always charged to PL account. The initial operating loss will never be capitalized. Then cost incurred after the asset is ready for its intended use till the asset is put to use, that already asset, it will not be capitalized. Relocation or reorganization cost. Here also students are confused. For example, I want to shift from this location to another location. So I need to dismantle my camera. Then again I need to incur some installation expense. Same with AC, same with projector, same with every item which is already installed. So whether that dismantling and reinstallation cost will be capitalized. No, it was already ready for use. So your shifting cost, relocation cost, reorganization cost will never be capitalized because the asset was initially ready for use. Now again you are doing installation, that will never be capitalized. So any relocation, any reorganization cost will never be capitalized. All these examples are given under AS10, and therefore in exam question they may ask this example only. You need to retain your mind. However, even though you forget and apply your common sense, it will never be capitalized. Chalega. Borrowing cost, already I have said, will be capitalized as per the requirement of just correction AS16. AS16 and government grant. Now suppose you purchase a property, plant and equipment and you receive some grant from the government. You purchase at rupees 10 lakh, you receive a grant of 2 lakh. So your cost is only 8 lakh. So we have one AS12. Make one correction. We have one AS12. AS12 says that grant will be deducted from the cost price of asset. So that will discuss under AS12. Right now you have understood that yes, the grant whatever you have received can be deducted from the cost price of asset. There are some other point that will discuss under AS12. The grant may be deducted from the cost price of PP. When, how, everything will be discussed under AS12. Chalega. This also you have understood. Let me take one more question. This question do by row. Must do. Whenever I am saying must do, it is your duty to do it. I will not say every question must do, but if I am saying one question or two questions must do, that need to be done today only after the class, whenever you have time. Okay, I think chalega. All other questions, this whatever is mentioned, that you can do by room. This also must do. Doubt will not come. You will be able to understand. Okay, sir. Now, the next point is PP acquired in exchange of non-monetary asset. But I don't think so. We will be able to complete this particular point today. So this I will defer it for tomorrow. Let me complete one more point. PP purchase for consolidated price. Now normally what happens, sometimes what happens, we purchase land, building, furniture, equipment, everything together. Means we purchase one old building with land, furniture, equipment, AC all together. In that case, how to identify the cost price of each item of PP? Because there are many items. In that case, what AS10 says, the total purchase consideration, whatever you have paid, will be allocated to each item in the ratio of their fair value. So fair value of that item will be given. Only you to allocate the cost price in all items in the ratio of their fair value. Whenever several items are purchased for a consolidated price, the consideration is apportioned to various items on the basis of their respective fair value at the date of acquisition. But there is no question for this in ICAI study material. Then PP held by lessee under finance lease, already I have said this discussed under AS 19. The cost of an item of PP held by lessee under finance lease is determined in accordance with AS 19. Now you must be thinking, so what is finance lease? All things will discuss under AS 19. Okay, sir. So only one point is left, that is PP acquired in exchange of non-monetary asset. But I don't want to discuss right now. So I will say today this much only. Okay. Chalega. Thank you very much for today. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your evening. Bye bye.